Welcome to my YouTube channel. My name is Ryan Banks, and my channel is about financial tips and tricks that you can bank on. So today's video is about a registered retirement savings plan, or in other terms, an RRSP. So I split this video into two parts. So the first part is going to talk about the purpose of an RRSP and the different rules surrounding how you can contribute and the benefits of contributing to an RRSP account. And my second part is going to be about the different rules when you withdraw from your RSP and a little bit about RIFs. So before I start the video, if you haven't seen my previous video about tax-free savings account, I would suggest for you to look at that real quick because I'm going to be referring to that video quite a bit because there are some similarities and I want you to be able to follow what I'm talking about throughout this video. So what is an RSP? An RSP is an investment account for your retirement, and the government gives you tax incentives when you contribute into your RSP. So I'll be going a little bit more detail into kind of the specifics into that later in the video. But the reason why you should invest into an RSP is because when you retire, you're not working, so you make less money. And you want to make sure that you have a safety net for when you do retire because you're going to be able to live the same lifestyle as you are now. So the reason why I'm kind of doing this video now is because the 2021 RSP contribution deadline is March 1st, 2022. So the government gives you about a 2-month buffer to do some tax planning to be able to maximize your contributions for every year. So who can invest into an RSP account? Well, basically anyone can with an income, but you need to be below the age of 71. The biggest advantage of contributing to an RSP account, in my opinion, is that you get to start investing while you're young, and that money gets to accumulate over the years. So there's a specific term called for that. It's called compound interest, and all that income that you make is tax-free until when you decide to take it out, and you're going to be taxed at a way lower rate, so you're paying less taxes. And you get to defer or delay paying those taxes 30, 40 years, depending on how early you start contributing. Now I'm going to go over how you can calculate your own RSP contribution room. It's 18% of your total income. And when I say total income, that means all the gross income from your T4s from your day-to-day job, plus your net business income, which means your revenue minus expenses, as well as the net rental income. So that means the rental you receive minus any expenses. So that's property taxes, water bill, utilities, etc. And also disability revenue. But the one type of income that you can include is investment income. The government doesn't allow you to bring that into the calculation. So when you calculate that total, it's going to give you an amount, but the government caps it at a certain amount every year. So for 2021, the total amount or the maximum amount is $27,830. And for 2020, it's $27,230. So that amount increases every year usually. And if you don't want to calculate it yourself, you can always look at your previous year notice of assessments that you get once you file your taxes, or you can look on your CRA account online. So the notice of assessment and your CRA account doesn't always have the most updated amounts because if you contribute throughout the year, it won't give you the exact amount. So if you do contribute, I would definitely keep track of that so you don't over contribute. But if you do over contribute, it's the same thing as a tax-free savings account. You get taxed 1% every month of the over-contributed amount. There is one small exception. The government does allow you to over-contribute $2,000, but I wouldn't get too risky with that. Now I'm going to show you a quick example of how you can calculate your own RSP contribution room. So I've got two examples here. So the first example, let's say I make $80,000 for my job and I have $15,000 of net business income. So a good example of that is someone starting out a new YouTube channel, for example. And I own a property, so I made $5,000 and I've got no disability income. So that gives me a total income of $100,000 and 18% of that is $18,000. So because $18,000 is below the maximum contribution amount, I would get $18,000 to contribute from RSPs for the 2021 tax year. In the second example, let's say later down the road, I make $150,000 and my YouTube channel has grown, so I make $30,000 and I'm able to invest into more properties, so I get more rental income and I have no disability income, so that's a total income of $200,000 and 18% of that is $36,000. And that $36,000 is above the maximum contribution amount. Therefore, I would get $27,830 of contribution room for my 2021 tax year. Another thing I want to talk to you guys about today is nowadays, employers have an RSP matching program. So that means I get a certain percentage off of my pay that gets contributed to an RSP, and my employer matches that amount that I contribute. So, for example, let's say I put in $1,000 throughout my pays for a whole year, and my employer put $1,000 as well. That means I got $2,000 worth of contributions for my 2021 tax year so that I can reduce my taxable income. Now, talking about reducing taxable income, you can see on the screen that I've made an example. And for the total income portion of this is the same example as my previous example that I showed you in this video. And I made two different examples so that we can compare the difference when you're in a higher tax bracket versus when you're in the lower tax bracket. So in the first column, for example, one, you've got no contributions with $100,000 worth of income, and I pay almost $18,000 worth of taxes. And I calculate these taxes based off the tax brackets that you can see on the right hand side. I'm going to go more in detail of how all that works with the marginal tax rates and stuff in a future video. But just for this example, I just quickly calculate for almost $18,000. And for example, two, I made $10,000 worth of RSP contributions, which means I reduced my taxable income by $10,000, which means I only paid $16,000 worth of taxes. So that means I saved $2,000 for a $10,000 contribution. Right, now we go to example two in a higher tax bracket where I had $200,000 worth of income, and the first column has no contributions versus the other for the same $10,000. So reduce my taxable income again by $10,000. So in the first column, I have $45,000 worth of taxes paid, and the second one, $42,000. So I save approximately $3,000. So when you compare the both, I saved around $850 by waiting to contribute that $10,000 when I'm in a higher tax bracket, which is 41% worth of savings, which is quite a bit if you think about it. So that's why if you're at the lower tax bracket under $50,000, you're able to do some contributions, but I would suggest that you don't use your entire contribution room every year and maybe wait till you're making more money later on so that you can get bigger benefit out of the RSP contributions. So last thing I want to talk about RSP contributions is that you can carry forward your contributions to future tax years. But I avoid doing that because you don't get the tax benefit right away. And if you don't get the tax benefit right away, you can use that money and invest it into your tax-free savings account if you have the room. So one strategy that I do is I'm in a lower tax bracket right now. So I do small contributions. I don't use my entire RSP contribution room because I'm waiting until I'm in a higher tax bracket so I can get the full benefit of my RSPs. But that small amount that I get to reduce my taxable income, which creates me a little bit bigger of a refund every year. And I take that refund and invest into a tax-free savings account, and that gets to grow my equity quicker that way. So this is the end of part one out of two videos about an RSP account. Today I went through what the purpose was of an RSP account and some of the rules of contributing and some of the benefits of contributing to an RSP account. So let me know what you thought about the video. Give it a thumbs up, or if you have any questions, you can write them in the comments, or let me know what you thought about the video. And stay tuned for the second video about withdrawals and RRIFs. So if you want to subscribe so you get a notification when the second video comes out, it'd be greatly appreciated. And yeah, hope everyone has a great day.